Welcome to the Metals Investment Forum. I'm here with GFG Resource CEO, Brian Skanderbeg. Welcome to Metals Investment Forum, Brian.
Thank you very much, Chen. Great to be with you guys today.
Yeah, I'm your shareholder, so your stock actually doing relatively well in the recent, the downturn of gold and juniors. Can you tell me why and what's the excitement coming? I understand you have a drilling program ongoing right now.
Yeah, I mean, look, as a CEO, we always want our share prices to be a little bit better. So I would probably take the counter argument to that to say I'd love to see our share price higher, but it's traded off modestly. I think we've performed very well in this more recent downturn, Chen. And ultimately, to me, that comes back to our Q1. We put out great results in the quarter. Timmins drill results that showed scale, showed grade, showed character of the system, and this was our first program at Montclerg. And putting those results to market, I think, really cued our shareholders and the market to what we have going. And so I'm not surprised at all that we've managed to maintain ourselves in this more recent downturn. And I have very high expectations to where we see this going forward. But that's the macro sentiment of why I think we've performed well. We've got a good balance sheet, good story, good people. And it's always key to have very relevant catalysts, which I think we do.
Oh, excellent. Can you tell us how much the drilling, how many holes through your drilling program, and what's coming in the next few months?
Sure. We kicked off the Montclerg drill program with about 3,200 meters in Q4, and we published those through Q1. That was about 15 holes, and that was our first program. Great results, demonstrated grade and shallow yet very open. Mm-hmm. We followed that up with another drill program, and that kicked off here in mid-February. We carried through to April, 17 holes, 4,200 meters, and not just holes to where we've drilled before, like little step outs. No, we stepped out 500 meters in both directions. So we were testing the system over 1 kilometer here. That looks very, very interesting, and we're happy with what we're seeing. So 17 holes, 4,200 meters completed in this. The vision is to see those come through the assay lab, and like most of the sector, we're seeing slower turnaround time of assays. So expect those to start hitting the market in June and July and lagging through the summer. But as I'm going to talk about in my talk later today within the forum, we're really happy with what we're seeing in the core. And we put quite a bullish press release out several weeks ago where we really summarized what we saw in the core. And essentially, we're taking a system that started at 500 meters, and the step-out holes are all hitting the same style of mineralization in either direction. So we're very happy with what we're seeing on that front.
Oh, excellent. So you see much bigger than your original drill hole, and then in much further step-out.
The Montclerg property covers about 30 kilometers.
30 kilometers, okay.
And we actually refer to it as the Greater Gold Arm property now. Montclerg is a segment of that. Mm-hmm. What we're drill testing is about, we started at 500 meters. We've extended that now, and the drill testing is going out about 1 kilometer over a total strike length. So the scale of the system is certainly growing quite immensely. We want to focus on this deposit. It was really drilled in the 40s and 60s before people viewed bulk tonnage concepts of mining, before cutoff grades had evolved down to understand where Timmins is as a camp, which is 4 or 5 grams is the average camp grade from underground, right? So this is what the camp has yielded, 70 million ounces at that scale of grade. So we're seeing impressive grades in our inaugural program. We're seeing impressive cores in the follow-up. And I think the really key for us to demonstrate is the scale of the system, understanding that if you back us off to say why we are where we are in Timmins, there's 4 mills that surround us. And those 4 mills are all needing feed as we advance through their histories. And whether you're looking at Pan American or Newmont or Agnico or McEwen, those are the 4 owners of the mills. And I truly believe that any relevant discovery in the area we're working in will end up in somebody else's mill. So we're quite happy with what we've demonstrated. It was a methodical, strategic plan to enter this area in October of last year, and we've executed about 5 deals to put together about 35 kilometers of strike length prospectivity in the Gold Arm property. And we're testing a segment of that, but we have a much bigger vision to say, how many mines are there along this pipestone deformation zone? So we're sitting at one end. Clavos is next to us, a historic producer of St. Andrews, Fen Gib over all with Mayfair Gold, and the Croesus property, High Gold, are about 20 kilometers to the east of us. So this whole corridor has large-scale gold systems along it. And GFG went in here and put together what I think is a very prospective and immature, from an exploration perspective, land package.
Oh, excellent, excellent. I understand you still have other property in this area. So what's your plan for the other project?
You look, GFG went to Timmins about 4 years ago, and we put together a property block called Penn, and we put together a property block called Dore. And those are west of Timmins. Together, they comprise about 700 square kilometers of ground. I would classify them as still greenfield. We've had economic drill intercepts. We have a large tenement. We've done a lot of regional work. And over the last 4 years, we've drilled some economic intercepts. I wouldn't say there's any particular target that's moving to resource scale yet. So what we chose to do was bring in something a little more advanced at Montclerg. We pair it with the other properties in the sense that Penn and Dore have great prospectivity. We understand they're still green in terms of their exploration maturity, and we want to continue to explore those. So at present, we have some budget allocation into Penn, and we would continue doing some exploration on that front at a more modest pace than we are looking to do historically. And I think it's really important to think about it from floating a corporation standpoint. You need good news flow, consistent news flow to engage with your shareholders. And with just Penn in our portfolio, I felt that we couldn't continue to deliver what the market was really wanting from us. So we needed to pair it. We needed to pivot and bring another more advanced asset in. And that's what we did in October last year. And that really changed GFG.
Yes, that's really changed. Yeah, that was so your stock turned and then continue to do well even in this downturn. So, and also you have another exciting prospect, which is Rattlesnake. And I heard they're doing some groundbreaking testing that could change the industry as we know it.
It's the what if portion of our company. What if you didn't have to mine gold to recover gold? What if you in situ mined it? What if you took an approach, whether it's like copper or uranium, and you dissolve the gold in a fluid in situ, and you recovered it? And our partners are trying to develop this technology for gold, and they brought it to our Rattlesnake Hills project. And ultimately, because of the jurisdiction in Wyoming, we have a massive land package. There's a large deposit of gold that's been drilled off. It's existing. It's an oxide facies alkaline gold system, so good template for in situ recovery in a great jurisdiction. So our partners are going through the initial phases of metallurgical testing and a lot of the physical testing on core. And the vision is to bring in situ mining to gold. Our partner's name is Group 11 Technologies. They bring proprietary leach technology to the gold space, which dissolves gold not with cyanide, but with a triiodide or with a salt. And ultimately, when you have this water-based solution that's dissolving the gold, you don't have nearly the impact, the toxicity, the challenge of dealing with the ESG environment, the permitting scale, never mind the capital and operating intensity. So the what if statement is, what if we could mine gold without having to drill, blast, truck haul, leach, invest 100, 200, 500 million in capital to recover it? So the vision is, can we bring and develop the technology that successfully applied to uranium and copper into the gold space? And I think Group 11 Technologies is really onto something. Great team. They're backed by real cutting edge technology drivers. Encore Energy adapted in situ technology for uranium, and they are a large shareholder of G11 Technologies. And the other side of it is Envirometals. And Envirometals developed this non-cyanide based ligand, and together they paired to develop it and apply it to in situ mining. And then they came to us and said, look, GFG, you've got a great asset in a great jurisdiction. We think it's a good fit for us. So we negotiated an option agreement back in July of last year. We've demonstrated some of the initial test work where just whole core immersion testing on a weakly to moderately oxidized sample yielded an average of 64% recoveries. So we are seeing strong recoveries from simple immersion testing in a non-cyanide based ligand. Those are proof of concepts, and there will need to be a number of proofs of concepts yet, large diameter drilling, a potential for in situ testing in 2023. So we're moving through the regulatory and permitting framework. We're doing a large amount of testing, and we would drill this summer with Group 11 technologies to recover large diameter core to take the testing to the next level. So that's the vision down in Rattlesnake. G11 and GFG have an option agreement. They can earn to 100% by carrying it to commercial production. We would have an equity interest and also an asset level interest through the option agreements. That's how we participate in this technology.
Yeah, excellent. So if this is successful, I don't know if it would or not, we will know that in a couple of years, it will be the revolution like a heap leach. What heap leach does to gold mining.
Ultimately, if you can take this technology and say, we don't have the intensity, the carbon footprint, the capital intensity to bring it mining, there is innumerable deposits that could become economic or that may become even more economic in terms of adapting this technology to it. And we all know the challenge we face in the ESG landscape. I think this technology is relevant. I think it will come in time. I think it's a great partnership for GFG.
Well, it's great. And then the free option for your shareholder, it haven't realized in your stock price yet.
Look, big picture, we're trying to create value for our shareholders. And if we can create more catalysts and good drivers for us to unlock value, that's our job as management. So we need to find a mine in Timmins, and we need a great partner down in Rattlesnake that can build a mine so we can own part of the mine too and the technology. So I think this is an innovative way to unlock value for GFC shareholders in an asset that would be marginal if you looked at it under conventional economics.
Yeah, yeah, excellent. Okay, great, Brian. I hope to watch your success in the coming years. And next time when you will be on the big stage announcing the groundbreaking results.
Awesome. Well, look, thank you very much, Chen. I appreciate the time, and Minerals Investor Forum. Thank you very much.